Hey, good morning. Morning, Goose. Morning, David. Morning, Al. Morning, everybody. And I just want to throw this out there. If you want to chat with us while we're live here, you got to be a subscriber. So hit the button and subscribe. And I didn't mute my phone. That was cool. So hit the button, subscribe, then you can chat. And while you're at it, you might as well hit the alert button with the little doodads and turn on all notifications so you get notified when I go live every single day about 9:10, 9:15 before the market opens. So, and if you want to join us afterward in Discord, links in the description. You can, expand that out and come check us out. Like $5, get you in there for 3 months, and I'll give you an indicator code and all sorts of stuff on the market roadmap that I talk about all the time and use every single day in my analysis. So, anyway, let's pop over here. Throw me on the other side. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Remember, I may be full of malarkey and crap and never predict anything right again. But this presentation here is intended to be informational, educational, fun. It is not a recommendation to buy or sell any financial instrument or anything else. So if you desire that personal financial advice, hire and consult a financial advisor. And so we have the calendar. And let's refresh. Got ads popping up like crazy. God, love it. So we are sitting here, first week of May. Yesterday we got a big drop on the jolts and whatever else, want to say factory orders coming in light. I mean, that's kind of indicating that the economy is light, coming in 1% light. So, I don't know. Wasn't really a big change. Kind of expecting 1.3, got 0.9. I mean, just kind of, it was light. I mean, everybody knows we're light, right? So, we're working on coming out of this recession. I mean, not a recession. I mean, excuse me, I shouldn't say that. We're working on coming out of this, not a recession. Everybody wants to say we're going into it. We already did it. Like, that's going to be the big surprise. Big surprise, probably this summer. I bet you the powers that be are like, hey, you know what? The U.S. economy did the recession, and everything's good. We're coming back out. Everything's, improving again. They're not going to announce that until everything's improving again. I mean, it's just the way they play. Like, how many people have been part of it before? They've seen this game. It's not in politicians' best interest to admit that we are in a recession. Because you know who gets blamed? Whoever's in power. They get blamed. But if they wait and admit it after we're coming out, well, that's good. We fixed it, right? So, anyway. Yeah, we got the t-shirt last fall. Yeah, price to sales collapsed. I mean, we sucked the wind out of the market. Housing, I mean, look at it. It went in the toilet. I mean, we pop over and look at the chart here. LBS 1 exclamation point up, exclamation point. There we go. Look at lumber. That's like the primary thing that we build crap out of. It's down to the lowest low. Gosh, how far back does that go? All the way back to COVID. Before that, May 2019. Are we just back at cyclical lows? I mean, before May 2019, when things were already getting rocky, we were back here to May 2017. And it's kind of funny, the last market kind of freak out there as we went into this right here, this peak. And then later on that year, we went into kind of a mini freak out right down here as that lumber price plummeted. Is lumber like a secret indicator for how the economy's doing? And we're down here in the bottoming zone for lumber prices. I mean, this is not like, hey, we're going into a recession. This is like, hey, we're doing the recession. And we look all the way back here. See, back in 2000, in the buildup, in the housing, look, we were going in the toilet the whole time. So anyway, this is lumber futures. If you're unfamiliar with what that is, we did a crazy bubble spike coming out of COVID, and then plummeted back, secondary spike, plummeting back. Probably going to do an extension lower. Probably not going negative. I need to put it in a log scale. Yeah, probably coming down to this 251 area on lumber now that we've broken the low. So, yeah, this is finished lumber though. Yeah, the retail lumber, for whatever reason, they keep effing with the price. But this is, like, if you're somebody like D.R. Horton, one of the big builders, you can go out and pay these future prices for your lumber. Like, this is the contract you write with the mill. So, retail prices, like, this is, like, if you're Home Depot, this is the price you're paying for lumber. The price that you're putting on the shelf is a whole different game. So, welcome to Economics 101 and making money as a business. Anyway, circling back around. So, S&P tried to break down yesterday after trying to break out the day before. So Monday, we tried to break out higher. Got rejected. Zoom it up really well here. Make these candles nice and big. So Monday, tried to break out higher. Tuesday, tried to break down. Got rejected. More clear on the ES chart that I have drawn here. See, we tried to break out higher. Got rejected with the red. Yesterday, tried to break down. Got rejected with the long tail. Today, showing a little green, getting a pullback off the highs so far, kind of consolidating right here. This puts us in a position right back in the coin flip zone. We could go higher, we could go lower. I'm slightly edging out a higher probability at this point because this is a higher low, and that's a pattern to pop right up into this 4,300 area very, very quickly, right here. Now, up through the FOMC announcement, probably kind of neutral. FOMC coming up at 2 p.m. today. Right here we are. We're about to get some news at 10. This could push us around. ISM Services PMI could create some volatility in the markets. We also get crude oil inventories, could create some crude oil volatility. That thing is right down on support. We could see that launch off. Like, it may not even make sense with the crude oil inventories, and we see it launch off. Just be prepared. Or it can break down. Like, it's right on support. We break support, we're going lower, probably down into the 50s on per barrel oil. If we start bouncing higher, we're probably going to break out and go on a run, but we got to wait till it proves it. So that FOMC statement coming out at 2 p.m. today. So lots of stuff. Like, there's lots of stuff coming up. And federal funds rate getting announced. Probably going to do a quarter point. I mean, that's the expectation right there. 5.25 on the upper end. We're sitting at 5% now. And of course, my famous, not so famous DGS2 chart with the Fed funds rate. Oh, we finally got an update on the Fed funds right up into the bottom of their target rate range right there. So we're going to see. We're going to see what happens here. We've got, I'm kind of expecting maybe we kind of fly sideways a bit. I need to pull this over to today. Right here, May 1st, 2nd. Yeah, it's on a weekly chart. So that's the, click save. So it saves. And then we're probably going to Control C, Control V. All right, I said Control C, Control V. There we go. We're probably going to get this little guy. Come on, grab it. Grab it, grab it, grab it, grab it. Oh, you gotta be kidding me. It's gonna be a pain in the butt, huh? So we're probably gonna pull this out, pull this over. And 5.25 right there. We'll likely see that. And maybe a hold. I think they're overshooting because the real market rate is down here at 4.14. That means we're going to be a whole point above the actual market rate. This is not good. In the past, this has led to large financial problems. And not just then, we had one here, we had one here. anytime the Fed funds rate starts exceeding the market rate for a few months, we get a giant financial crisis. And you may say, oh, well, 5 banks have blown up already. That's nothing compared to the potential that we may see if this thing craps out. Now, if everything gets better, we could see this thing go on a tear again, but need to keep an eye on this DGS2, the 2-year Treasury constant maturity rate. That's a mouthful of the FA. So, the real market rate for interest rates, 2-year Treasury constant maturity rate, that's the real market rate that the Fed is competing with. So, right there. The real market rate on this is right now, 0.75 lower? And if they raise it another quarter point, we're going to be like a full point underneath their rate, their make-believe rate. So we're going to see what happens later on today. Probably do a quarter point raise because they're arrogant and stupid. But what do I know, right? We've already got the money supply shrinking, as we talked about on Monday. So this is what does my friend Wiz say? A moral hazard, kind of, for the Fed. They're going to blow something up if they stay above the market rate. And if they push it higher, I mean, they're already above the market rate, and they're going to push it higher. Why are you creating a gap? Like, that's just ridiculous. You're not going to force the market to follow you. They always chase the market. And continuing to go higher while the market is going lower just exasperates the coming financial problem. Now, usually when these cross, we get about 3 to 4 months before the real problem hits. We've already got 6 weeks on us, so we're already, a month into this. So we've got potentially another 2 to 3 months if they keep flying this way, if things don't improve. So just be aware. All right, just be aware. Yeah, everything's a nail when all you got's the interest rates to mess with. They've pretty much destroyed all their other things. They should have done away with the reverse repos. They're spending trillions of dollars a year at this point just servicing the interest off the federal debt. So yeah, who advises the Fed? Not me, apparently. I don't run in the right circles. So anyway, this is just. It's blatantly obvious to me, but sometimes when you're in the thick of it, you can't see the blatantly obvious forest for the trees you're cutting down. So anyway, let's talk about what's actually moving today and how we can make some money. So S5FI just hanging out in the middle, and I should have used the other chart, not this chart. So S5FI just hanging out in the middle, got a little slam back down right to the middle yesterday. Still think we're popping to the top. Like that's kind of my bias. We could see a little more dip, but probably heading up here ultimately before we head back down here, since we just came off the lows. ES, like I said, kind of looking for that sideways up until the FOMC, and I put on a position for SPXL out to June. I was talking about that yesterday. It was in Discord. Talking about doing 30 minutes of awesome last night. Let's see if I still have it up. I do, right here. Put on 10 of these bad boys, $450. Very small risk for me. If $45 is a small risk for you, do 45. If 4,000 is a small risk for you, do 100 of these. I mean, the liquidity is not extreme, so be careful going in too big on this. I did an 86, which is significantly out of the money, but it also puts the price way down here. And if we get that pop to 4,300, this thing's probably going to pop up to $1, maybe $2. Maybe. You can look at the pricing. I did go out to June to give myself plenty of time and not get the theta decay. So there's that one. And kind of explaining that it was just a small position to take advantage of a crazy pop out of the FOMC. Now, I also have on some SVXY puts. SVXY, reminder, SVXY is short VIX. This thing drops when VIX pops. Looking for a correction in VIX, probably in the neighborhood of 12%, somewhere right around here off of the high from up here. Yeah, that's 14. Pull it back up just a hair. Somewhere in that $62 area, we could see that run down. Now, I bought a $66 put on SVXY. kind of expecting this freak out. Now, if we zoom out and look at this, the whole history of SBXY, this thing tends to pull back about 12% since 12% is a small pullback since COVID. Like this was the COVID freak out, and as we've climbed back out of that, a small pullback on SBXY is about 12%. So if we're going to do that small pullback after making that extension right there, probably something down around 62. I went with the 66 put. It was under the water by the end of the day. So if we get that negative reaction, that's kind of covering me right there. But if we do that, we probably won't go much more than about 20%, which would be down around 56. I mean, that'd be a pretty good profit, right? 10 bucks, your $1.75 option going to 10 bucks. So if we saw that kind of freak out, go all the way down here, about 20%, that would be time to get long SVXY because it's likely to return to the mean unless everything just blows up. But, it's like done this, I don't even know how many times this year or in the last 2 years. Let's see. Got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 14 times. We've reverted right back where we were in a short amount of time. So it would be prudent to go, if we see this kind of pullback, go out a couple months, buy a call, and wait for it to come right back up, book your profit, get out, and wait for the next one. So that's the hedge play on SPY. So hedging the upside and hedging the downside right there with SVXY. Because if we get the volatility the upside, SVXY will not respond as greatly as if we get the reaction to the downside. So this thing is a short, slightly leveraged. It does not decay like VXX or UVXY. And one of the beautiful things, when things drop, their implied volatility spikes. So it's like exasperates the options prices too. That's a beautiful thing to play. Beautiful reason to play puts on something like SVXY, because as volatility increases in the market and SVXY starts dropping, that means prices get ramped up exponentially, potentially. So that's why I'm playing puts on SVXY and not calls on something like UVXY. Calls don't tend to show as much implied volatility increase as puts will show on something dropping big. Make sense? If not, we can keep talking about it in Discord. So, all right. NQ, didn't really get the pullback that we saw in S&P 500 yesterday, or Russell. So NQ still very much primed for that final pop up here, and that's why I am long a put on SQQQ. Again, same situation as SVXY. SQQQ. Come on, keyboard. Look at all those nasty letters. Come on. Come on, come on, come on. SQQQ. I need to put one of these Bluetooth receivers right up here on top of the desk, apparently. So if the market pops, if QQQ pops, this thing likely to drop probably down here around 25, maybe as far as 20. This is an ultra short, so this thing is leveraged. Ultra short means when QQQ drops, this one pops. So as QQQ pops, this one drops. And again, I'm playing the put because as implied volatility increases, that put gains more money faster than it should. All right. So yeah, I'm long SPXL because, hey, it's a leveraged thing, and I'm not adding leverage to leverage. And SPXS doesn't move the same way. So if we look at SPXS, come on now. The market just opened. I'm just blabbing, not even getting to the list this morning. SPXS. Man, keyboard. Maybe the battery's going dead. So SPXS, look, down here at 17, whereas SPXL up here at 70. So it's a pricing issue. Like SPXS doesn't have far to go down, so it's not going to pay. And that's why I'm in SPXL instead of SPXS. this thing break out probably on that pop to 4,300. We could see this move right up here to about 88. So my 86s would be about $2 in the money on top of the implied volatility potential. And the August high was right up here, so that really could extend up here to about 95. All right. It's just about playing the potential. You know, these rule of thumbs on the playing the extra volatility are not universal necessarily. Get a crap load of alerts on something. Good grief. All right. Russell messing around right at the bottom of the box. Found a little support at the bottom of the box again. A breakdown can take us down to 1670. A break back above the roadmap line up to 2000. Nothing really changed here. Sideways is what I really expect until the breakout up here or the breakdown and a daily close below the box. Seems to be lots of buyers coming in as we push below that box. Dollar, as predicted yesterday, getting a little slam back down. Probably going down to the 90s. AMD got slammed right back to the roadmap line. That's perfect. It actually touched this time. Watch for it to launch off. Aggressive entry above the prior high right here from a couple days back. Now that we have earnings, earnings were good. No real logical reason for it to retrace other than it missed touching the roadmap line a few days ago. Technically, still sets us up for the target right up here at the same area. Right up there around 107 to 112. Ford announcing their earnings. Made money, positive. You know, beat by $2 billion. But still a lackluster response. Not really doing anything except filling out the triangle, going sideways. Just not happening yet. It kind of mucked up my pattern that I was looking for a breakout. Now we just got to wait for it to break out. It's either going to break out or break down. There's kind of the range, up to 20, down to 7. Kind of sucks. That's what we got. Stupid triangle bullcrap patterns. If it can break up, maybe retrace and actually break out and maybe get back on the 5-year plan for it to reach those kind of high prices like I predicted in the YouTube video that's on my channel. CVS, garbage, man. Even though they beat on the top, beat on the bottom, beat by $4.5 billion, still going in the toilet, probably headed down to 63. SBUX, positive, making money, bouncing off the 1272, probably going to retrace back to the roadmap line. In case you can't see it because of the zoom, bounce off the roadmap line. Yesterday, kind of the indication that we may see the retrace right back to the roadmap line, find support here, and then go for the next extension. EL, ouch, big down. Right back to the lows. Estee Lauder. That's aren't they the ones that hired the Bud Light person? Getting punished for that, apparently. Decided to cooperate with the person that Bud Light partnered with before they got slammed. So be careful. Yum. Well, that went crazy. Restaurants doing this pattern shows we're coming out of the recession, not going into the recession. Everything was shut down. This was the recession. We're coming out. This is the kind of stuff we see coming out, not going in. This was what we see going. This is recession. This is coming back out. I mean, we see it over and over. You know, Starbucks, Yum, Chipotle. You know, it's coming out. Like things are better for MCD. Like, I mean, companies figured it out, and now they're making money, and that's what pulls us out of the recession. So Wingstop, right? Another one right here, popping. Lily, beautiful. Probably gonna get a retrace from here. Not the likelihood we go on up to 450 is diminishing the higher we go. SMCI, finding resistance right there at the top. Supermicro computers. These guys make AI computers, I'm pretty sure. They put together packages of computers for AI research. So that's probably why they're ramping up. This one might be a good one, Goose, to add on to the conversation we were having pre-market. Might throw that one out for Jody. Disappointing on the top and the bottom, but that'd be a play on the AI revolution right there. APM, that's one I didn't even think of. APM, that looks pretty horrible. Popping above the roadmap line, still below this consolidation. If it can't break above that, probably going lower again. That's a pharmaceutical, so unreliable. Generac, looks like they beat on the top and beat on the bottom. Nice 30% surprise on earnings. I've been seeing commercials like 20 bajillion times a day for, I don't even watch much TV. But like every other commercial is freaking Generac, get your Generac installed at your house. Add stability to your power. I don't know what that's all about around here. We have relatively stable power, but I guess it works in other parts of the country. Looks like they could be coming out of this funk here. Could be reversing fortune. It's going to take a break above here in the roadmap line. Yeah, right. Going to take a break above that to get me interested in going long. Otherwise, it can just come up here and bounce down and do an extension. Ruth, that's going to be Ruth's Chris, right? That one. High-end food, not looking so hot. Earnings coming out Friday. And what's DR? Is it DR? Let's see. What's the other one? Trying to remember. Darden? Yeah, Darden. Let's get that one. And Darden's doing pretty good. So Ruth, not so good. BLDR, look at that. Housing, rocking it, baby. It's where you're buying your lumber cheap, selling it for expensive. Builder's First Source, that's a building supply house. It's kind of like 84 lumber. Not really retail, but kind of retail. Anyway. ALB, looks like it's on the path to going lower. BIIB, that's a biotech and slightly unpredictable, but looks like it could be about to break out and go retest this high from up here. No idea what their news is. This one, biotechs do move on drugs and stuff like that, get approved or disapproved or whatever. So hard to, and it becomes more of a political game than anything, unfortunately. Some of it has to do with actual killing people or not killing people or helping people, but a lot of it's political. I don't even try to predict it. PRTA, another biotech, looks like it's just consolidating. KRBP, looks like on the path to zero. Top, that's just ridiculous. Probably going to retrace at some point here. SAP. This is a dangerous chart. Don't mess with stuff like this. There's nothing to predict. Limited history. And it looks like complete garbage. This is probably coming back to zero, or coming back to reality at some point here, barring some kind of crazy buyout. So it's an investment bank broker. SAP. Looks like we're headed to the resistance there. Lithium or Livent, whatever. Livent Corporation. Chemical specialty, still a downtrend until we can break out. GDC, crazy volatility, whatever is going on there. Packaged software, is that some kind of AI deal potentially? I don't know. No idea, but that's a lot of volatility and dangerous. Like that's not unreliable to make money off of. So bias for the day, sideways until FOMC. FOMC, we'll see what happens. We could drop, we could pop. We're in a coin flip zone. That's what that box, I mean, that's what we've been in for weeks now. We'll probably have some clarity by the end of the day. So come back tomorrow and we'll talk about it. All right. Thanks for coming, everybody. Like I said, we'll see you again tomorrow morning. Same bat time, same bat channel. Make sure you subscribe. Make sure you hit the bell with the notifications. And if you want to talk to me about the FOMC and all the stuff, come hit me up in Discord. Links in the description. See you again tomorrow. Thanks for watching. Thanks for coming.